going on, everyone? My name is Brian and welcome to the Brian Talks Money Show. Today we're going to be talking about the controversial loan level price adjustments again. And no, I'm not talking about the one that penalizes borrowers who have good credit and a big down payment when buying a house to make it cheaper for borrowers who don't have good credit, don't have 15 to 20% for their down payment, which to me makes absolute no sense. But you know what does make sense for me? You smashing that subscribe button, giving this video a like so you never miss out on what's happening in the economy and real estate. But okay, let's get right into today's show, picking it up from a HousingWire.com article titled FHFA Rescinds Controversial DTI LLPA. If you don't know what that means, this new loan level price adjustment that was set to go into effect August 1st made it so that any borrower who uses a conventional loan for their home purchase gets tacked on extra fees if their debt to income ratio was above 40%. The article begins by saying, "Did you hear that sound? That's the entire mortgage industry shouting, hip hip hooray!" And you know what I say? One down, one more to go. The Federal Housing Finance Agency on Wednesday announced that it would rescind the controversial loan level price adjustment for conventional borrowers with a debt to income ratio above 40%. The FHFA, which regulates Fannie Mae and Freddie Mac, had previously delayed the implementation of the DTI LLPA from May 1st, 2023 to August 1st, 2023, following the chorus of upset mortgage industry stakeholders, including the influential Mortgage Bankers Association, the article mentioned. Let's think about it here for a second. Homes are already expensive as they are. Higher rates surely don't help. And on May 1st, responsible borrowers got the short end of the stick. So you're meaning to tell me that the DTI fee was coming next? Now, unless the FHFA has been living under a rock, consumers currently are carrying the highest level of personal debt they have since ever. But let's see what industry members had to say about this. Mortgage industry lobbyists and practitioners alike complained that the fee was unworkable and would result in logistical and compliance nightmares, as well as confusion and mistrust from borrowers. I appreciate the feedback FHFA has received from mortgage industry and other market participants about the challenges of implementing the DTI ratio-based fee. The FHFA Director Sandra Thompson said in a statement Wednesday, "To continue this valuable dialogue, FHFA will provide additional transparency on the process for setting the enterprise single-family guarantee fees and will request public input on this issue." To me this just sounds like, damn, we got caught. And now we'll need to provide clear evidence to back up how this makes sense. Because truthfully, it doesn't make sense to me. But then again, what does make sense nowadays? Just kidding, that's a discussion for another time. Let's keep reading. The FHFA also put out a request for information on other new fees, including those imposed on borrowers with higher credit scores and moderate down payments. Just like the industry fought back on the DTI LLPA, I believe this is a good case that we can possibly have an opportunity to rescind the high credit fees the article mentioned. There we go, just like I mentioned earlier, one down, one more to go. But okay, let's put this into perspective. With everything already happening in the economy, I believe that this fee would have affected the middle class hopes and chances of owning a home. For example, I can assure you that there's borrowers who have worked their ass off for years to put themselves in a position to be able to buy a home, only to find out it's even more difficult now. The article mentioned it would have imposed a cost on borrowers at a time in the market when affordability is already stretched and only made them riskier, NAR President Kenny Parcell said, and added, likewise, the FHFA's decision to release a request for information on other changes is a great example of good governance. The National Association of Realtors, America's largest trade organization, along with Mortgage Bankers Association, prompted the right pushback, arguing that this could hurt the middle wealth of homebuyers and increase overall pricing. Something that can be concluded from this article and the decision that was made is that this move suggests that the FHFA is still considering alternative pricing methods and seeking feedback from industry stakeholders. My argument here is that who are they to impose these fees? How and why? And every time we see something like this happen in our industry, it hardly ever benefits a consumer or industry member, and it only brings more confusion and distrust. Now, I will agree with the CEO of the National Housing Conference on this one. He argues for a fair playing field for first-time homebuyers across all income levels. I believe Fannie Mae and Freddie Mac should charge the same fee for everyone, as was practiced between 1938 to 2008, and as FHA loans do today. But in conclusion, this position reflects a desire to improve access to mortgage credit for underserved borrowers, and while ensuring safety and soundness in the housing market. I firmly believe that everyone should have the opportunity to own real estate if you're positioned correctly, meaning you have the income, you are smart with your finances, and ultimately have a strong plan in place. So if you found this video insightful and you learned something from it, then please share it with a friend and hit that subscribe button, and I'll see you guys on the next one.